You're welcome to Remit Trade Academy. In today's video, I'm going to show you how to use the ATR indicator to figure out a very sound entry in the market. Remember, the ATR indicator is only used for set an ideal stop loss. Now, in today's video, I'm going to show you how you can use the same ATR indicator for figuring out how to enter the market in terms of continuation patterns. All right, so if you've not subscribed to the channel, help subscribe to the channel, hit that like button, and don't forget to turn on the notification bell. Also, leave a like for this video. So if I go to Binance here, if I go on Binance, then I move to trade, then I will go to advance. Then on advance here, if I move the chart to 1 day chart, okay. Now this is 1 day chart. Now this strategy cannot be properly used on the 1 day chart, but you can still use your top down. After your top down, then you can then go to your 1 hour chart to do this very strategy. Remember, this is the ATR indicator, and you can always put in the ATR indicator by going to technical indicators, and then you type ATR on the search bar here, and then you put in your ATR indicator. Now, don't change the format of your ATR indicator. I can only increase the visibility, and then I click OK just for visibility purpose. Leave it at 14 period. Like in my other video, if you've not watched that video, check in the description below or check the channel. You see ATR trading strategy and watch the video on how to use it for ideal stop placements. Now leave it at 14 period. Like I said earlier, the 14 period here means that the ATR calculate on average the last 14 candles, okay, the last 14 candles, and then it will plot the value of each of these candles. So if you look at this value here, you discover that if I move the cursor, that's my crossbar here, to each of the candlesticks, you discover that the ATR value here changes. Now for this video, I'm going to show you how you can use it for entry. So how can you do that? Now let's say, for example, the market is consolidating or after an impulsive move. Two things you have to figure out. Number one, the market is consolidating, and then after an impulsive move, what happened? Now, one thing you have to understand is that the ATR indicator is not a momentum indicator. Rather, it's a volatility indicator. So what we are doing in this very particular strategy is to know where volatility is flowing to, and then the direction of the ATR. Then if we can know these two things, then we can figure out the next move in the market. So in this case, if you look at here, from this level, you see the ATR was already down. Okay, the ATR goes down, which means there's a high volatility in the market. Then at this point was a retracement. So after every impulse in the market, is a retracement. So don't forget that. So if you are aware that after every impulse is a retracement, then at this point on the ATR dip right down to this very level. Okay, then we see an increase, that is volatility. So this indicates volatility, but if you look at the chart right here, there was no volatility, there was no significant volatility. Rather, this was a retracement. So market retraced right to this point. Okay, now if you look at this very level, market go right down with this retracement. So at this point here is an indication that if this was a retracement, and then the ATR was already down after this very move, which indicates volatility in the market, it means the next move is going to begin shortly. So if you look at market move from here to this level, from this area it goes down, the ATR indicator was still going right down because of what? Increase in volatility. But we've recognized that this was impulse, retracement, then after every impulse is the next retracement. So this is another, impulse. Okay, now this is in the case of impulse pullback. So impulse pullback or impulse retracement. Now the next one is this. If you look at this level, the markets were just consolidating within this level. Okay, there was consolidation within this area, and then what we see here is that the ATR the ATR indicator was down. You see, market increased a little bit in consolidate around this level. Then what we see a breakout. So even though you are trading breakouts, okay, at this level, you see an increase in ATR. This is a solid confirmation that, okay, since the ATR was not moving either up or down, it means a period of low or little volatility, and then we see a breakout, ATR starts to move to the upside. It was a strong indication that the market is going to go right down. So you start looking for short opportunity after the close of this very candle. After the close of this very candle. So if you do the calculation on how to place your stop loss, like that I showed in the previous video, it will give you a nice stop placing and then your entry. So your entry is supposed to be this level. So you're supposed to enter this market here, while your take profit will be somewhere above this very area, and so this way you're supposed to enter the market, and your stop loss supposed to be somewhere around this area. Then your take profit target will be 1-to-1 risk reward ratio or something bigger than that. Okay, now this is the second example in terms of breakout. This one in terms of impulse pullback strategy, market go back down. If you look at what Bitcoin is doing right now, this is the current price of BTC. This is 33,478. So this was another consolidation area. So if you look at this area, market was consolidating this level. So if I figured out this level here, say this was a consolidation area, if I bring it down to this point, then see this area here, okay, market consolidated around here, then we see a breakout. This is where we see a significant breakout. Now if you look at the ATR was going down. Now when the ATR was going down, we did not see volatility on the charts in the market. Then after the ATR dipped right down, then we now see this breakout. This was a strong indication as well that the market is still going to go deep down. It's a very simple and straightforward strategy that you can use to trade the market with 80% accuracy. All you need to do is to identify the structure of the market. Okay, let's say we look at BNB USDT. If you look at this level, markets go right down up to this point where you see the ATR was down here. And then if you look at this very point here, the ATR was already going down, which means there was a volatility move to this level. Market move up, so it was going down, volatility was in the market, but this was a retracement of this impulsive move. So market move an impulse from this level down here, and then it then retraced. This was a retracement. Now this retracement was so big, this was about 80% retracement of the initial move, but that's not a problem. Reason being that we've already seen that the ATR was down around this area. Is down around this area, so which indicate that this market won't go up anymore. So it was the right time to short the market when the market make this very bearish move. So if you do that, the market will go in your favor, go back right up. This is a consolidation around this area, which is also a retracement before the market go right down. Now, if you look at this very level as well, this place that you see consolidation, after the breakout with this very candle, you discover that the markets go right down. Why volatility increase to the upside? Now, you can't use this strategy for momentum. Like I said earlier, the ATR indicator is not a momentum indicator, rather is a volatility indicator. So you don't buy here. Instead, you're looking at your chart. In terms of this case, is a breakout. So in this case, the market breakout around this area, and you see the volatility of this very ATR indicator was down. Then after the breakout, we see an increase in volatility to the upside. Okay, but the market was coming down. So the right way to use it, like in this case right now, this is what the market is doing right now. You see the market consolidation, the ATR was already down, low volatility around this area on the charts, but there was increase in volatility to the downside on the ATR. But what we are seeing on the chart was there was no volatility. The market break down, then ATR increased to the upside. So you have to use this strategy accordingly, not in terms of momentum. So if I look at another pair again, the same strategy, very powerful. If you look at here, You see this point here? Market was down already. The ATR was down with volatility. On the chart here, we see no volatility. The market was not moving up nor down. There was a side-by-side formation of candlestick right here. Then after that, we see a breakout. So after the breakout with this candle, let's say for example you enter here and then you are going short. Let's say you are shorting the market, you enter at this very point where you see the breakout. Let's see the breakout around here. You see, you will make a whole lot of profit, a whole lot of money. So your profit target at least 1-to-1 or 1-to-2 risk reward ratio. So after the market move right down, you see the ATR start to increase in volatility to the upside, but the market is going down. So it's the opposite of what the ATR is doing. Now, another thing you have to understand is that how can you figure out when a retracement is about to come in after you've entered with an impulse? So you can use your volume indicator to do that. So if I put in my volume indicator here, anytime you see a volume spike, on your charts and on the indicator, it's an indication that market is going to retrace in the case of market going down. So in this case, you see there was a spike here, and after then you see the market go up a little bit and then it come back down. Then you see there was a spike here as well. So after this spike of this candle, see a spike. So the spike here occur on the candlestick that is on the chart here and on the volume indicators. Then after the market go down a little bit and then retrace. You can also see another spike on the candlestick here as well and on the volume. So spike on the volume indicator, markets go back up, retracement. So you can apply this as well with your ATR to figure out when the impulse have ended. So the spike in times of market going down help you identify, okay, the impulse have ended here. Retracement is going to come in before the next impulse again. Like in this case, you see this is a very big candle spike. Be very careful. This market is going to retrace very soon. This market here right here is going to retrace very soon for the next impulse to come in again before the market will now change direction to the upside. So that is that, guys, for today's video. If you apply this strategy very well, identify area where you see the ATR was going down, and at that point on the chart there was no volatility. So anyway, you see no volatility on the chart and the ATR was going down or up, just know that very soon the market is going to go one way and the identification should be in line with the markets. So if you do this very well, you're going to get your entry right 80% of the time. Thank you very much for watching today's video, and I will see you in the next video. Ensure you give a like to this video, subscribe to the channel, and turn on the notification bell.